right, thank you for staying with the Monday Report live from the Kenyatta International Convention Center. I'm sure you've noticed the beautiful water fountain display that is out there. My guest is still with me. We're talking about the Public Service Superannuation Fund, which is the PSSF fund. My guests are with me. Honorable Wycliffe Wangamati, Chairperson, PSSF. Agnes Mwenda, who's the Vice Chairperson, PSSF, and also a member of the Union of Kenya Civil Servants, and Dr. Jonah Ayabe, who's the CEO for PSSF. Thank you so much for staying with us. Now let's open the floor for questions, and let's see where is the microphone. Yes, sir. Start with your name and your question, please.
Good evening, viewers.
Good evening.
My name is Otiende Charles. I'm a teacher in Vihiga County and also serving as secondary Kupet, Vihiga. The question I have, I picked from where the chairman left. Members who are in the service up to 2021 and they were below 45 years. You are saying that the regulations are out and the benefits that were in the old scheme will be paid by a different pension, and what you have contributed from 2021 will be paid by PSSF. The question is, when members will have two files at the point of exit, it is creating a lot of problems. The teachers are asking that we need a law to compel the cabinet secretary to compute with the old formula so that that money that was in the old pension can be brought and be put into one fund so that at the point of exit, we only have one file for claims. Thank you.
All right. Thanks, Charles. Let's take another question. Who has the microphone? Yes, madam. Start with your name.
Good evening, viewers. My name is Lillian Kingi from the National Treasury and Economic Planning, and I am a member of PSSF. My question is that in the event that a member dies, will the beneficiaries get a third or the entire amount?
In the event of death. All right. Thank you, Lillian. Where's the other microphone? Yes.
Good evening. Adam Katana Shemba, CPA Adam Katana Shemba, let me be clear, from Economic Planning. Equally, representing Union of Kenya Civil Servants as the Secretary, Nairobi branch. I have a question. Civil servants are asking this question. Yes, the scheme is good, but they wonder how does this board meet the expenses? They think maybe we may be dishing further into their contributions. Maybe to put another question very fast from the same. They're equally wondering what will happen when they'll be leaving the service. Now that the employer is doing 7.5, they're doing 7.5, and the employer is doing 15%. So that is savings. And the key mandate of this scheme is to invest. And investment comes with proceeds. And when they check into their balances, there's nothing like proceeds. So which formula will you use to give these members the take home? Will the proceeds be included in the savings on the long term? Thank you very much.
Thank you. Is the other microphone? Yes, sir.
Good evening. I'm Ontomo Jeremiah from the National Treasury and Economic Planning. And my question is this. What if the investments are poor and there are no returns? Would you use the contributions to meet the scheme's administration expenses?
Okay. Thank you very much. Chairman, you can start and then you can distribute the questions depending on how you would prefer. Otiende Charles said that what if you're below, will the members have two files or the old pension money will be moved?
A very good question from Mwalimu Otiende from Vihiga. Basically what he is asking is if, for argument's sake, you have done 20 years up to 2021, and then you have another, you retire 2031. So you have 20 years under the old scheme, and then you have 10 years under the new scheme. As it stands now, yes, the 20 years you'll then have to go to the Department of Pensions when you retire and receive that benefit. So you'll have two benefits, one from the Department of Pensions, and then the 10 years, 20 years from the Department of Pensions, the 10 years from then PSSF. What I want to agree with you is that if you look at what has happened in other countries, whether it's South Africa, in Botswana, similar situations, the government has managed to look for resources to transfer then the accrued benefits from the old scheme to the new scheme. And that means there should be physical transfer of money. Now, where we are, Mwalimu Otiende, it's very difficult that where we are as a country, because as an actuary, when I look at those obligations, are massive, financially massive. So it is a very difficult situation, but I think it's a conversation that we are still having with government and seeing can they spread it over 20 years to pay for this transfer. But as at now, you'll have two benefits, two files. I don't want to cheat you. Two files. One, you go to Pensions Department, another one to PSSF. There's a question that I think...
from Lillian, that in the event of death, will the beneficiary get the full pay? Or?
Let me ask the CEO to answer that.
Thank you very much. I think first and foremost, if for the unfortunate situation that a member, the principal member dies, being a defined contribution scheme, the rules are as follows: that we basically close your account by paying the entire amount which has been accumulated in that fund. So there is no monthly pension. We just give to the beneficiaries as per the stated wish of the principal person while he was alive. So if the total amount that was in that account is, say, 2.5 million, we just pay 2.5 million. If you nominated 3 people at a given ratio, we share and pay it off and close the account.
I think there was a question from CPA, I can't remember his name.
Adam Katan.
CPA Adam, Secretary General of Civil Servants, Nairobi branch.
Yes.
Let me ask.
Vice Chair.
Vice Chair.
He was wondering, how does the board meet its expenses, or do they eat into the contributions of the pensioners and proceeds from investment and the take home? There's no indication of what the proceeds from investments are.
Thank you, Trevor, and thank you, Handrams, for your question. Allow me to say that there is no time when the member contribution is used to pay or to meet any expense. The administration of the scheme and all the expenses that are paid is decided by and in line with the Act, Public Service Permission Act, and also knowing that the scheme is registered and regulated by Retirement Benefits Authority. The Retirement Benefits Authority again sets a percentage from the investments that is supposed to be used for the daily running the administration of the scheme. So there is no given time when member contributions are used to run or to do the day-to-day running of the scheme. Adam's second question was about the end when the member reaches exit. How is the pension calculated? Unlike the other scheme that was defined, the defined scheme, this one is a contributory scheme where the member is contributing, the employer is contributing, and the total is put into investment. So upon exit, the member package will be calculated based on total member contribution, plus employer contribution, plus the investment, the interest from investments, minus the expenses that are used for administration and in the running of day-to-day of the scheme. I hope I've answered your question, Adams. Thank you, Trevor.
You can do a follow-up if you have a concern.
Let me just add to what my Vice Chair has mentioned. Your second question, Adams, if I didn't get you wrong, I'm a very slow learner, so just understand me. You did ask that you don't see proceeds. But what I wanted to say is this, that at the end of every financial year, this fund declares an interest. I think 2022, 2023, if I'm not wrong, John, it was about 6%. Return was declared in addition to your member and employer contributions. 2023, 2024, we declared about 12%, 11.9%. This year, we'll be declaring end of June, this month, about 14%. So on an annual basis, we declare that those are the proceeds. So you compound it every year. You're an accountant, you compound it every year. So when you get retirement, you have that compounded interest, compounded contributions, then you take that as a lump sum, the remaining as a pension. I think that hopefully answers the question.
Is there a chance, like Jeremiah was asking, that what if there's no returns on the investment? Have you made losses in your investments?
I think, very good question, Trevor. The advantage that we have is that over the last 20 years, I have not seen where schemes have done negative return. Given that 70% of the assets of this scheme mainly are in government securities, right? And that means that there's a guaranteed return from government unless government goes down. So that probability is there, but it's a very small probability.
Okay.
A very diverse portfolio. We have government securities, we have equities, we have offshore, we have private equity. So chances of a nil return or a negative return are very, very minimal.
Yeah, and that brings me to my next concern, Chair. How has the board worked to balance what we call the member needs and the long-term sustainability of this fund?
Very important. What is very important for members are two things. One is capital preservation, which we are speaking about, ensuring that the contributions that I've made, the contribution that the sponsors made on my behalf are secure. I think that is the first thing. The second thing is then maximize the investment return. Yeah. Thirdly, the member needs is that, and I think that's what Jonah spoke about, is that when I retire, I want to access my benefits as quickly as possible. So those are the needs. So in terms of how you balance the two is to ensure that the portfolio you have preserves the security of members, the capital preservation. That means that when the member gets to retirement, his member contributions, employer contributions are there. The legal framework that we have in this country sets out how you need to invest. Yeah, which class you have to put in money, which risks you have to take, the advice that you get from investment managers, so that you can then maximize investment return. Thirdly, I think in terms of member needs, the biggest one, which I think I've mentioned, is to ensure that when I retire, Trevor, it doesn't take long to access the benefits. And that is why this scheme is there. I can assure members of PSSF that when they get retirement, Jonah, I think we'll be moving towards almost 24 hours. You retire today, in 24 hours, you should be able to have access to your benefit because the money is there. The money is there sitting with the bank. So there's no point, Trevor, that what we have had over the last 40, 50 years, people coming to Treasury, somebody has died after 2-3 years, their dependents have not received their pensions. Those are things that will be out. So that is one of the biggest member need that you can see in this PSSF. That will happen once members start retiring.
All right. And Agnes, I know there's a concern here from someone like Charles, who just mentioned, Otiende Charles, who said that they have a concern that they will have two files at the end of it all. So how are you ensuring then that your member voices are heard and action is taken? Because that is their concern. Like, I don't want to have two files. And they're much more from what they're saying here.
Thank you, Trevor. The question is very clear. The regulations are very clear that the years the members served before the operationalization of Public Service Pensions Fund is with the National Treasury, the employer. From 1st January 2021, when they started contributing to Public Service Pension Scheme, that is the money that will be paid by the scheme. Trevor, it is difficult if we say Public Service Pension Scheme to pay for the years member worked. Where will they get the money to pay the members? There is no money. So we have to ensure that what members have contributed, what the employer has contributed, the interest from investment is paid to the rightful people who have contributed to the kitty. Then upon getting that pension money, then they go to the employer for the accrued benefits for the years that they served, which is going to vary from one member to the other because they were not employed at the same time. Thank you, Trevor.
Okay. Let me bring in the CEO on this. CEO, what are some of the benefits for PSSF that offers to members? Because we've talked about someone increasing their contribution. What are some of the benefits? The chairman has also talked about the investment interest that comes to them.
Right.
What more?
The benefits that members will derive from this scheme includes the ability to have what I think my Board of Trustees did mention earlier, a dignified retirement. One of the key things is that all these members that we have, the good number of 300,000 plus teachers, the 115,000 police and prison members and NYS, and of course the over 65,000 civil servants. All these members are used to what we call end-month payslip. And when you reach the sunset age of, say, the age of exit from formal employment, and you're used at every given month you're getting a salary, it becomes tricky if you don't get anything. So what we are trying to say is that the members will have a reasonable replacement income of what they were able to, what they were earning while they were in active service. And our target is to build these funds so that at least when they exit, they're able to get what they can really easily sustain, or pension which is reasonably adequate to replace what they were earning in service, and give them for the rest of their life, and perhaps also transfer to their beneficiaries. So one of the key things that we offer is a retirement benefit. The other thing is that in the unfortunate event of really passing on and you're in service, your dependents or beneficiaries doesn't need to suffer, because at least there is something that they can fall into, because they'll be depending on you. So in this case, we also offer what we call death benefits, or other benefits to your spouse or your children in the unlikely event that you pass from this place. The other thing is that the membership of this scheme, remember, we are running an investment, we are running a pension fund, but purely large of the conversation that you have seen today is about investments, about finance and all that. So during our sensitization process, we also promote financial literacy among our membership. So if they're able to plan for their retirement, we want to sensitize a member who has just joined employment. Even if you are around 18 or 20 years, you get to know that a time will come for retirement. And therefore, if you look at the numbers you're contributing to 7.5, you think it may not be adequate for you, you have an opportunity to mobilize additional contributions through AVCs. So we're able also to build in more pension funds, more capital that can serve the economy by encouraging the members to also contribute. So we have the additional voluntary contributions that is also an avenue for members to even increase beyond what is prescribed as the 7.5 and the 12.5. So the other thing that we offer to our members is that we are developing modalities within the Retirement Benefits Act to offer post-retirement medical scheme. So as soon as we complete the structures and the operationalization of that, they will also be able to finance while in service a fund that will take care of the post-retirement medical scheme. So there are quite a number of things that we have put in place that I believe members can really benefit out of it, Trevor.
Okay. So how much is this? How much is the contributions per month, and how much is this pension fund worth as we speak?
Okay. Now, as we did mention, every member of the scheme, as per the Act, they contribute 7.5%. No,
collectively, how much do you
of their basic salary? Yes, I'm coming to that.
Yeah.
And then the sponsor gives 15%.
Yeah.
So if you talk about 500,000 members and all those salaries, the number goes reasonably big. So member contribution goes to around 1.3 billion per month. It may look a lot of money, but if you look at the people who have a claim over that money, if we are to do a per capita claim of that money, it may not look that big. But yes, we receive around 1.3 billion from the members' contribution, and another 2.4 billion, around 2.4 billion from government, making a total contributions of around 4 billion per month.
Per month?
Yes.
And how much is this fund worth now?
Now,
approximately?
Yes, the members of the scheme now have assets, I think as at yesterday, we are talking of around 228 billion worth of assets.
Yeah.
Which basically is not cash that we are holding in the fund. As Chairman did mention, they are distributed within the various asset classes and our portfolio. We have invested in various places.
Yeah.
We are looking for more investment opportunities and considering quite a number of things from even out of the traditional investments that people do know, like investing in quoted equities, public funds, private, and of course government bonds. We are now stretching our thinking, and that's why we're working with fund managers, experts, to see how we can even bring alternative investments that can not only increase the value of this member's account at the time of exit, but can also give an opportunity that these funds can also come to build the economy that we're existing in.
Exactly. And in fact, that's why I wanted the chairman to bring in to talk about what role does the PSSF now play in building the economy, because the figures CEO is talking about are colossal amounts.
Trevor, before I even just come to the issue of what PSSF does for the local economy, just to add to what John has said, one benefit that is overlooked, and I think it is in the regulation, the RBA regulations, but I think for some reason we have not managed to get members to appreciate it, is that today as a member of any scheme, you can walk to a bank, you want to buy a house, walk to a bank, get a mortgage, you can use part of your pension to guarantee that mortgage. By doing that, you can negotiate with the bank for a lower mortgage rate. It's a benefit that it's within PSSF Act. It is available in all pension schemes in this country. It's within the RBA Act. I think it's a very nice benefit, but for some reason, I think we have not managed to get members to appreciate and actually go for mortgages backed by the pension benefits. But coming back to your bigger question about the role of PSSF, for you to appreciate the role of PSSF in the local economy, it's important that, Trevor, you appreciate the role of pension schemes in the entire country. One is that when you look at pension assets plus life insurance assets, because they're all long-term, Trevor, you're looking at about 2.5 trillion Kenya shillings being held by assets. In terms of a percentage of the GDP of this country, is about 15% of the GDP of the country. When you look at the local debt, government borrowing locally, the total amount, Trevor, is about 6 trillion. 30 to 35% of that is pension schemes lending money to government. That's one big role that pension schemes do play. So when you look at all those numbers, it does make a lot of sense. And that is why where we sit as a country, we also agree with what the president is doing to encourage more savings towards resources. Increasing the saving rate in this country. As we are at 15% pension assets versus 15% of GDP, a country like South Africa, Trevor, at 50%, a country like Netherlands, 150% of the GDP is pension assets. Basically, every company that you go in South Africa, you will have a pension scheme investment in that scheme. So they play a very, very, very important role. Coming back to PSSF, Trevor, PSSF is now the second largest scheme in this country after NSSF. And remember, NSSF has been there for over 50 years. NSSF total assets probably about 500, 600 billion Kenya shillings. PSSF, John has mentioned, is about 230 billion Kenya shillings. We see it over the next 5 years, maybe 500 billion. So it's going to play a very, very important role. Thirdly, and more fundamentally, Trevor, is that pension schemes do help deepening of financial markets in the country. John is talking about alternative investments. Those alternative investments will come up if we have savings to invest in those alternative investments. That will help deepen, whether it's private equity, whether it's whatever that you want to look at, unquoted securities, the secondary market of bond, whatever. So they play a very, very, very important role in the strengthening of the economy.
I have to take another quick break. When we come back, I'll take the next set of questions from the audience who have the microphone. I'll pass on the microphone shortly. But stay with Citizen TV's Monday Report. We're taking a quick break. We're back with much more in just a short while, so don't go too far. We're still having this conversation on the Public Service Superannuation Fund, PSSF. All right, see you shortly.
She's already made history. But on the 26th of June in Paris, she takes on her boldest challenge yet. To break 4 minutes, she must outrun her own limits by over 7 seconds. This is more than a race. It's Kenyan pride. She is running for Kenya. Let's rally behind crowning faith.
Thiongo and Michere Mugo's The Trial of Dedan Kimathi is coming home to the Kenya National Theatre. See Kenya's struggle. Witness history come alive on stage from 19th to the 29th of June. Tickets available at View Tickets.
Luku diriba, lukumpiai, lukuni piam, piam, lukumpiai, luku diriba, lukumpiai, lukuni piam, 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 lukumpiai, luku diriba, lukumpiai, lukuni piam, piam, lukumpiai, luku diriba, lukumpiai, lukuni piam.
Use money apps or a simple spreadsheet to monitor where your money is going.
Grow biashara yako by using your M-Pesa till to get Tasi Till loan. Enjoy easy application na instant approval. Ipate kwa M-Pesa business app ama dial *234#. M-Pesa.
All right, thank you for staying with the Monday Report Town Hall session live from the KICC. We are still speaking about the Public Service Superannuation Fund, the new pension scheme. Let me see, by a show of hands, was the microphone for questions? Yes, sir. Start with your name and your question.
Thank you, Trevor. My name is Peterson Kidetu. You mentioned earlier that this scheme, the Public Service Superannuation Scheme, will process the pension benefits to members immediately after the exit, which was on timely basis. Now, we have employers who may take long to remit. Now, how prepared are you to deal with non-remittances?
Okay. Dealing with non-remittances, yes. You have the microphone back there. Yes, sir.
I'm Christina from Kenya Prisons.
Yes, Christina.
Justina. Yes, Trevor.
Question.
Thank you. My question goes, is it possible for the members to be involved in determining how much to withdraw as their lump sum upon exit from the service? Thank you.
How much to withdraw?
Yes.
As lump sum?
Yes.
Okay. Yes. Yes, sir.
Good evening, viewers. My name is James Kiplimo from Kenya Prison Service also. My question, Trevor, is will there be a lump sum and monthly repayments on retirement, and how will they be determined and calculated? Why pay a third and not the full amount at once? Maybe that clarification. Thank you, Trevor.
Okay. Yes. You have the microphone. Yes, sir.
Good evening. My name is Alfred Ongonge from the Ministry of Tourism and Wildlife, and also from the Union of Kenya Civil Servants. I have two questions to ask, because I've heard from the CEO saying that payments are done, can be done within 24 hours. But the question most of the people are asking, what mechanisms are in place to avoid delays in processing pension payments? Okay. Then the last one is, does the scheme offer any investment or savings products for retirees? Thank you.
Investment or saving products for retirees, yes?
Yes, good evening. Yeah, thank you, Trevor. First, I must commend the good work you are doing for the PSSF. My question, my name is Duncan. My name is Duncan Waga, and I'm from Kenya National SMEs Alliance. So it's good that you've brought this conversation, and it's quite interesting. So my question is, if you have enrolled to the PSSF, will you still pay tax for the old scheme? Yes, will you be paying tax for the old scheme? And my second question is, I've not heard of anything to do with those of from SMEs. Is there any plan to at least enlarge or at least extend the packages you have to cover those who are not from the public service sector? Yes, and my last question is, it's good that before the establishment of the scheme, you did a research. So my question is, after it's good you saw a gap that would benefit others, which I think is a niche of the public service. So why did you not at least try to modify the old scheme to cover at least have more of benefit to the public service?
Okay.
Yeah.
Thanks, Duncan. Yes, Jan. We'll start with Peter dealing with non-remittance. Yes.
Non-remittance,
Yes.
A very good question. I think, Trevor, we are lucky that our employer in this case is government. Of course, different arms of government, whether it's police, whether it's TSC. But over the last 4 years, we haven't had an issue with an remittance of contributions from government. So it is a question that we have not faced such a challenge yet. So I don't think it's something that should worry people, because as of now we are receiving contributions on time. The 2.8 billion from government, the 1.2 billion from members, we receive it very regularly. So we're up to date. So I don't think it's a big issue for us. The second question, I can't remember.
Justina and James' question is almost related, because you're talking about how to determine how much to withdraw. And James was asking how much lump sum do you give for monthly repayments, and why just giving a third and not the full payment?
Let me ask Jonah, or I think Jonah.
I think it's a very good question, and rightfully, Trevor, the two questions are really correlated. I think Justina is asking whether you can have flexibility on how much you can take as lump sum at the time of exit, if I got that question correctly. And the gentleman the second question was why a third?
Yeah.
So let me just combine the two in answering as follows. Research all over, and including even here in Kenya, has proven that an employee who is used to a monthly payment will always have a way of budgeting that monthly amount. If you shock this person who has been earning, say, 60,000 with a pay of 7 million, there is a likelihood that the 7 million will not serve that person for a longer duration of the balance of their life. And therefore, being a pension, and the word here pension is we are looking at an annuity, regular payment, so that you can sustain your same standard of living, same behavior of life, not shocking you with a lump sum, that when you complete, you go back to the account and you find that there is nothing. So for that reason, these regulations and the Act of the Retirement Visitor Act provides that it is prudent and good for the member, and this is research all over, that you receive regular amount as opposed to lump sum. Within the regulations, by the way, we just give the maximum of the lump sum that you can take. But we don't say, you can as well choose to say, I need a 0% of lump sum, but confirm everything to be an annuity pension, to be a pension. And that's now what works out very well, because you are used to that money, it can serve you for a longer duration. So for the good of the member, you don't allow to be given lump sum. And remember, members and the audience, that there is a very high gratification to satisfy immediate needs And anytime you are given a lump sum, you will have 101 needs or other wants that will come to your mind. If you have never thought of running maybe a transport business, that could be the first place you will imagine, or many other things. So it's safer and it improves your long-term life if you are given pension as opposed to lump sum. The other question about how we determine the lump sum, was it about determining the benefits? Lump sum? Yeah, the determination is very clear. We are running a defined contribution scheme. So it's just akin to having an account in the bank. You give your 7.5%, the government gives you 15%, interest is added every year, and when you exit, we go to your account and check what the balance is. It's out of that account that we say, if you wish, you can take up to a maximum of that in form of lump sum, and the remaining to that we use to buy for you a pension. So what we have in PSSF is that you can get a pension provision from an insurance provider or what you call annuity providers, or you can undertake what you call an income drawdown arrangement. So those are the benefits that we even have within the scheme. You can as well say, yes, retain with the funds, but I will be drawing down regularly for a given period of time. So those are how you can determine the benefits.
All right, there's a question from Alfred in terms of what are the mechanisms you've put in place to avoid delays and their investment or saving products for retirees.
Okay.
Yeah.
Vice Chair, you want to, or John, you can take it.
Yeah, the mechanism we can put in place to ensure there is no delay in payment.
Yeah.
I think at the beginning of this, the chairman here and the trustee, we have made it very clear that when you have a contributory scheme, so really it is like you have your funds. It's set aside. And the rule of pension funds is that the contributor, it doesn't have a reverse way of going back. So we separate the funds from the sponsor's funds. So really, when you exit, there should be no reason why we cannot be able to give you money, because it was set aside from the time you're employed, invested, and it's available. So there is no competition with other fiscal requirements or other budgetary obligations of the sponsor. In this case, this has been just set aside for you. So those are the mechanisms. We ensure that we track the members' contribution, their interest, and we are able to determine it on using the systems and the technology in a quick moment so that you are able to get your funds. We have actually consolidated even the process, Trevor. Initially, there used to be very complicated pension claim system. And I can see my manager in charge of benefits is smiling somewhere, because it used to be a very voluminous document. Now we have consolidated to, I think, a online 2-page form that you just want to say, yes, I'm retiring, and we get consent from the employer, and from there we compute your benefits.
Okay.
So there's no 15 or 18 steps for processing benefits. It is your money already.
There were 3 questions from Duncan. One, what is the taxation regime? Do you pay taxes on the old scheme as well?
All right, okay.
2, why don't you extend these packages to those who are not civil servants? And why didn't you just enhance the old scheme instead of setting up a new one?
I will answer briefly on the perhaps Chairman tax. One, in terms of taxation, is governed by the Income Tax Act. The taxman is keen to collect what belongs to them. You are given a maximum of contribution. When you are contributing, 30,000 of your contribution is tax exempt, with effect from this year 2025. It improved from 20,000 to now we are talking about 30,000, which is a great relief from this government, because for many years you used to be exempted on tax of only 20,000. So, but if you are a member of those schemes, it is the consolidated of those exemptions. So if you are contributing 10,000 other place and maybe 15, they had the 2. So the previous scheme, remember, was non-contributory. So there is no tax applicable at that particular point of contribution because you are not contributing in it. So there is no loss in terms of tax. And even at the time of exit, when you are exiting employment, there are provisions that you can be given which can be consolidated for the 2 funds, and you don't suffer any loss by having the funds in 2 schemes. And just to finalize on this, my vision as I look at this scheme, PSSF, the future of pension schemes is to run big funds and gather for many people so that you enjoy what you call economies of scale. So we are looking at opening up to many other pension funds who are registered with RBA, or any other member who can join, or any organization that can be declared as part of, say, public service and can be a member to be able to administer their funds. So there is a window for the SMEs to be members of this scheme. And that is what we are working towards, even enlarging as well. So I think, I hope I've clarified that.
Unless Chairman, you want to add on to something in terms of why?
No, in terms of taxation, the taxation, as I think John has mentioned, in taxation in this country of pension is what we call exempt tax, which means is that the contributions you make up to the maximum of 30,000, John is talking about, you don't pay as you earn. You don't pay PAE on those contributions. The investment income, you don't pay tax on it. However, you pay tax on benefits when you start receiving. But I think the last, I haven't seen the last finance bill, Jonah, I don't know what it is.
Them at exit, yeah.
Yeah, I think they have pushed it lower that from the age of, is it 65?
Yeah, above 65.
From 65, you don't pay any tax on the benefits that you get as pension. So it's exempt tax. That's the tax regime that we have. Yeah.
All right. We're really pressed for time here, and John, I'll start with you to make closing remarks. Where do you see this PSSF in the next 5 to 10 years? As you make your closing remarks, then I'll come to Vice Chair and the Chairman.
Thank you very much, Trevor. When I look at 5, 10, or even beyond years, in the fast-moving society, very dynamic people who have joined the pension space. Long time, it used to be pension are for the old. But in the modern world, with the Gen Zs and every other person taking the space, pension is for everybody. So I am seeing this scheme to be a technology-driven pension fund, where even our investment strategies will leverage on AI, artificial intelligence, will leverage on technology, including even the robo investment systems, to optimize investment returns. I'm looking at this scheme to be member-friendly, member-centric, where the member will not have to struggle to track their benefits, where within the technological space, in the comfort of your home, you are able to see the movement of your funds. If we pay your pension, you just get a tracker. If we credit your interest, you just see it from where you are. If you want to enroll a new nominee, you don't need to go all the way to anywhere. You can just walk from where you are. We are seeing this scheme to be built to be larger in terms of employers. We will open up, we are looking at it to be carrying a big scheme. If you look at countries like Australia, which is a whole continent, you realize that they have less than 100, I think they have around 63 superannuation funds. So we will want to be one of that big fund that can be able to properly manage, prudently manage the investments and give a decent return that will all enjoy the economies of scale. Beyond that, Trevor, the future of pension fund will be, this public pension fund will be a driver of economy. The economy, it will be a major catalyst to the Kenyan government in terms of provision of long-term capital.
Okay. Vice Chair, what is your message to all the PSF members? What would you want them to hear?
Thank you, Trevor. My message to public service pension members is that the employer has put a good strategy to ensure that the long-term objective is to ensure members, upon exit, you live dignified life. At the same time, it is the broader objective of the employer to ensure that we reduce old age poverty. Before exit, the 10 years you're talking about, the members who join the scheme at 45 years or 44 years, they'll have started to exit. But before reaching that point, let's endeavor to give quality services to Kenyans who need our services, so that upon exit, you leave legacy that when you are serving as a public servant in this country, you impacted Kenyans in the small or big service that you are giving to the citizens. Always remember, service to mankind is service unto God.
Right.
As the employer is planning for you to exit in a honorable way, also purpose as an employee to give quality services to Kenyans.
Okay.
Thank you, Trevor.
Thank you, Vice Chair. And Chairman, as you give your closing remarks, the last time I had you there, you were the governor for Bungoma. Are you running for office in 2027, just out of curiosity?
Let me answer why I'm here first. I think in terms of just message the members of PSSF, Trevor, and I want just to emphasize what the Vice Chair has mentioned. I think maybe 9 out of 10 members of PSSF do not realize they are members of PSSF. And I'm looking at the union, I'm looking at the SG of COPET. They actually don't know they are members of PSSF. Because people are deducted 7.5%, but they don't check where that money is going. I want to appeal to members of PSSF. Please check your pay slip, understand where that money is going, look for the investments, look at the member statements, know that you are building a fund. It is important, it's your money. And the sponsor is making contribution to it. So for me, if that message can get to members, that they have a scheme where their members, they are making contributions, the sponsor is making contributions on their behalf, it is important that they actually monitor those contributions and understand and ask questions and be part and parcel of AGMs when they're happening in this country. Coming back to your question, Trevor,
yes,
about politics, and I'm happy that I'm here. I haven't been on this stage for some time. I think you'll give me an opportunity next time in your show so I can come and you can ask me that question. Now that I'm here, I'll not run away from that question.
Yeah.
One, elections are in 2027. So you have another 2 years thereabouts to elections. Before people start, making decisions. I'm not so sure even the SG here may want to run as well. He doesn't know whether he wants to run. Secondly, Trevor, I'll say this without any fear of contradiction. I think the 5 years that I have served in Bungoma, I think I have a clear track record there. If you go today to Bungoma, you've got a guy even in this audience here who comes from Bungoma, ask him, I have a clear record. The 5 years that I was there as a governor, you can go back. And that one I'll say without any fear of contradiction. So if today I decided to go back to run for governor in Bungoma, I think people in Bungoma know who Angamati is. I came from private sector. I was an MD, then went and ran for governor, won, and did, in my own view, a fantastic job for 5 years. So, in fact, one of the things that I'll tell you, Trevor, is that one of these days, get your guys just to go and run what I did for 5 years in Bungoma. It will be a good story for devolution in this country. So we'll make the decision when the time comes.
Okay. Thank you. Thank you very much for making time this evening. Asante sana. Wando Weekly Wangamati, Chairperson PSSF, Agnes Mwenda, Vice Chairperson PSSF, and Dr. John Ayabe, CEO PSSF. And also special thanks to all of you who came here this evening. We appreciate your time, including Akelo Misori, the Secretary General Kupeta. Asante sana for making time. And all of you for watching this show tonight. Live from the KICC, we say thank you, good night, and God bless. Special thanks to the Kenyatta International Convention Center for hosting the Monday Report Town Hall session today. All right, bye for now.